with chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Chief Investment Officer at BIG Investment Services. That's BIG, Booth Investment Group. We're full-service financial advisory based out of Dover, Delaware, serving clients all across America. You can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, April 24th, 2026. Some shout outs to Diane, Beth, Juan, tuning in from Dominican Republic. But we got listeners all over the world. Appreciate everybody tuning in, checking us out week in and week out. Hey, by the way, I'm doing a little bit of traveling this week. So if you hear some thunder in the background, that's just what it is, man. I don't know what to tell you, so don't be alarmed. Another mostly constructive week on the market. Dow Jones was down 0.4%. The S&P 500 up 0.5% on the week. The NASDAQ composite, your tech stocks, et cetera, up 1.5% on the week. And the Russell Small Cap Index up 0.3%. Russell Small Cap Index, by the way, just killing it. It's up 12% year to date. I mean, double the NASDAQ, triple the S&P, and 6 times the growth of the Dow Jones. So the small cap index really rocking and rolling this year. Volatility index is measured by the VIX. It was actually up about 7% on the week, finished at 18.7. We'll talk about the whys and some of the ups and downs of the market here in just a moment. Looking at long-term bonds is measured by the TLT. They were down 0.4% on the week, still down on the year 0.5%, just not getting any traction there. But when you take a look at the sectors, huge dispersion there in regards to returns. You've got the retail sales were down 1.3%, consumer discretionary down 1.4%, utilities were flat, staples were up 1%, energy up 3.3% as things continue to be concerning in regards to Iran. Healthcare down 3%, technology up 3.8%, communication services down 2.9%. But the big mover of them all were the chip stocks. I mean, the semiconductors were up 9.1% on the week. We've got AMD in our models. It was up 24.93% this week. Just this week. It's up right now, 62% on the year. But semiconductor demand just continues to be insane. And as these companies report that demand is really strong, the numbers just drive these stocks much, much higher. Even NVIDIA, which has been lagging pretty substantially since October, in on the action this week. It was up 3.2%, so not up a whole lot compared to its peers, but still moving in the right direction. Looking at gold and silver, gold down 2.8%, silver down 6.5%. So what's moving markets? Well, you got a dichotomy of things here. You got the war in Iran continues to be the big sloppy headline, right? Things are deteriorating. The market looks bad, goes down, doesn't do well. We saw that earlier in the week. Things may be improving. Maybe those talks are on. Maybe peace is still in play. Market bounces back, markets are up. So that's a big overarching factor on all of this. But in addition to that, we are eyeball deep in the midst of earnings season. Like this week, software stocks took a hit. We've got ServiceNow. Bill McDermott's the CEO of that company. I think it's a fantastic company. They reported a beat. They reported a raise in their earnings, but the market didn't like it. It wasn't a big enough raise in the market's opinion. Market didn't like the margin. I don't know what the market didn't like, but the stock took a hit. It was down 6% on the week. I think the market's got this stock wrong. When you see the numbers and you see the growth and you see how they're executing, I think the market's wrong. I think a lot of times this stuff is algorithmic. As computers jumping in on a certain phrase or a certain line out of an earnings report and just kicking in the trading gears and selling or buying. And I think we saw some of that with ServiceNow because it was down big time on the day it reported, and it was up 6.4% today on a little bit of a rebound. Still down 6.7 for the week, but you understand where I'm going there. Just a lot of volatility based a lot off of knee-jerk reactions to earnings reports. And we saw a lot of that this week, both to the downside and to the upside. But overall, earnings, as we expected, have been good. Outlooks have been pretty solid. On top of that, we've had some nice economic data. Economic data has been pretty good. We've had some stronger PMI numbers, retail sales numbers. I mean, things have been looking pretty decent on the economic front. So right now, the market's holding tight. And listen, the good news is, at least for the, let's say, intermediate term, short to intermediate term, the market confirmed the breakout. I mentioned last week, this market needed to hold 7,000 by the close of business today on Friday. And it did. It held 7,000, closed the week out at 7165 on the S&P 500. Remember, that's the one that counts, folks. And look, I love you all. And I know you love the Dow Jones. And I know you probably get frustrated because I never, ever talk about it. As a matter of fact, if you stop me on the street on any given day and say, hey, David, where's the Dow? I probably wouldn't be able to tell you because it's just irrelevant. It's the S&P, guys. The S&P, that's what counts. That's what matters. 7165 on the S&P. I know what the S&P is doing every minute, every day. Not necessarily know what the Dow's doing on any given time, month to month. I have no idea really. And someone said, Dow's 50,000. Like, really? That's great. I didn't even know it. Anyway, I digress. My point being, the market, as defined by the S&P 500, held a key level this week, 7165, 7,000 level, I should say. And that's a good sign for the intermediate term. I think the market can continue to be constructive as long as things don't get derailed with Iran, or the earnings outlooks for the next quarter and the year-end outlook don't deteriorate too bad. Let me give you a good example. IBM had a good quarter. They had a great quarter. They had a beat. They had a raise, but all they did was confirm this year's guidance. They did not raise it. And the market knocked the stock down 8.5% this week. We've got that stock in our income models, right, for our retirees. Knocked that stock down 8.5% this week. So, I mean, it's a great company. We've done really well with IBM. It's just what they're doing with quantum. I went to an IBM facility in Washington, D.C. They've got a facility there that is where some of their brainiacs hang out. They're working on quantum computing. I got to talk to these guys and see some of the work they're doing. Some of the stuff is like top secret, but it's pretty cool. And I can just tell you right now, I mean, this company is cutting edge at a level that most folks have no idea, no comprehension of how cutting edge they are when it comes to quantum. Plus, they're involved in AI, and they've got a lot of good things going on in the corporate computer infrastructure space, et cetera. So my point is, great quarter, nice beat, everything else, but they didn't raise the guidance for the year. The market punished the stock. So the market's looking ahead. The market wants to know, what are you going to do for me tomorrow? Not so much what you did for me yesterday. We're going to get a lot of big earnings reports next week. A lot of the Mag 7, the Magnificent 7 stocks, Google, Facebook, et cetera, they're all going to report next week. So we're going to get a lot of insight from those companies. That could be market moving. You're also going to have a Fed meeting next week. There's going to be talk about interest rates. That could be market moving. We've also got quite a bit of economic data coming out next week. The first read on first quarter GDP and lots of other things. So there's lots of stuff coming next week. Lots of market moving headlines next week. So we'll be watching all things and see how that pans out. Look, as I've said, week in and week out for the last few weeks, I just love where we sit at the moment. We're in a beautiful position to take advantage of the market if it wants to go higher, as we did this week, and also hang on and hang in if the market does get knocked for a loop, which could very easily happen with what's going on in Iran. I don't trust that whole scenario yet at all. I mean, yesterday or whatever, Thursday, I think, Iran took a couple of ships, shooting at other ships and turning ships around. And there's just a lot going on there. And I don't think we're out of the woods on any of that stuff yet. So we'll see. Bottom line is, I love where things are positioned for our portfolios, for our clients. We're having a great year. If the market wants to act up, we've got the protections in place. If it wants to go higher, we've got the money position in a way to take advantage of that as well, as evidenced by days like today or even this week. I mean, look, AMD today was up 14.1% today. Hey, that really pushes us higher. Makes our portfolios look nice. All right, look, I'm going to go and wrap up. But between now and next few meetings, you're thinking about your future long-term goals, all the things you want to do with you and your money. Maybe it's buy that second house, take that big trip, retire a little early, or just simply retire. You know what your goals are. Don't just think about it. Think big, think BIG, and I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.